Where does your tax money actually go every year? Millions of citizens dutifully file their taxes, watching a significant portion of their income vanish into the vast machinery of government. You are told it funds schools, hospitals, roads, and public safety. You are assured it builds a better society. But if you have ever wondered why your local roads are still full of potholes, why public services feel stretched thin, and why, despite paying more taxes than ever, life does not seem to be getting easier, you are asking the right question. The uncomfortable truth is that where your tax money actually goes is very different from where you think it goes. The gap between perception and reality reveals one of the oldest financial tricks in the book: misdirection. Let us start with the promise. When politicians campaign, they talk endlessly about investing in infrastructure, education, healthcare, and community programs. These are the visible, tangible things that make people feel their taxes are worthwhile. But here is what most citizens do not realize. The largest portions of tax revenue do not go to the things you see and use every day. They go to things you never see, and that is entirely by design. In the United States, nearly half of all federal tax revenue goes to just 3 categories: Social Security, Medicare, and Medicaid. These are entitlement programs, promises made decades ago that now consume massive portions of the budget. For context, Social Security alone accounts for roughly 21% of federal spending. Medicare and Medicaid combined take another 25%. That's nearly half the budget locked into programs that function like financial black holes, growing every year as populations age and costs rise. Now, entitlements are not inherently bad. People paid into these systems their entire working lives, and they expect returns. But here is the trick: the government never actually saved that money. Social Security is not a savings account. It is a pay-as-you-go system where current workers fund current retirees. The surplus that was supposed to exist was spent long ago, replaced with IOUs. The system depends entirely on new taxpayers continuously feeding the machine. When demographics shift and fewer workers support more retirees, the math breaks. And who pays the price? Future generations, through higher taxes or reduced benefits. Then there is the second largest expense: defense. In the United States, military spending accounts for roughly 13% of the federal budget, but that number is misleading. When you include veterans' benefits, nuclear weapons programs managed by the Department of Energy, and interest on past military-related debt, the true figure is much higher, closer to 20% or more. This is not money spent protecting borders in the traditional sense. It funds overseas bases, advanced weapons systems, and contractor profits. Companies like Lockheed Martin, Raytheon, and Boeing receive billions of dollars in government contracts every year. The trick is that military spending is politically untouchable. Any politician who suggests cutting it is accused of being weak on defense. So the spending continues, year after year, while schools and infrastructure crumble. And speaking of infrastructure, the roads, bridges, and transit systems you actually use, how much of your tax dollar goes there? In the United States, infrastructure spending is less than 2% of the federal budget. Let that sink in. The thing politicians constantly promise to fix gets a fraction of what is spent on defense or entitlements. The reason your roads have potholes and your public transit is outdated is not that there is no money. It is that the money is allocated elsewhere to less visible but more politically powerful interests. Education tells a similar story. While politicians love to talk about investing in schools, federal spending on education is only about 2% of the budget. Most education funding comes from state and local taxes, which means the quality of your child's school depends heavily on where you live. Wealthy areas with high property taxes get well-funded schools. Poor areas get leftovers. The system is designed to perpetuate inequality, and your federal tax dollars do almost nothing to change that. Then there is the category most people never think about: interest on the national debt. This is where the trap really closes. The United States currently owes over $36 trillion, and every year it must pay interest on that debt. In recent years, interest payments have exceeded $600 billion annually, more than the entire defense budget in some years. Think about that. Your tax dollars are not building anything or helping anyone. They are paying interest to bondholders, wealthy investors, foreign governments, and financial institutions that lent money to cover past deficits. It is a wealth transfer from taxpayers to creditors, and it is accelerating. As the debt grows and interest rates rise, this category will consume an ever larger share of the budget, squeezing out everything else. And here's where it gets darker. A significant portion of government spending does not even appear in the official budget. It is hidden in off-budget spending, programs and expenditures that do not show up in the normal accounting. Subsidies to corporations, bailouts for failing industries, and tax breaks for the wealthy all represent money the government is not collecting or is spending in ways that benefit a small elite. When a major bank gets bailed out, or a corporation receives tax incentives, that is your money flowing upward, disguised as economic policy. Let's talk about corporate subsidies. Every year, governments hand out billions in direct payments, tax breaks, and grants to large corporations under the banner of job creation or economic development. Fossil fuel companies receive subsidies despite record profits. Agricultural giants get payments regardless of crop performance. Tech companies get tax incentives to build facilities they were going to build anyway. The public sees none of this directly, but it is funded by tax revenue that could have gone to schools, healthcare, or infrastructure. Then there are the bailouts. In 2008, when the financial system collapsed due to reckless lending and speculation, who paid to save it? Taxpayers. Trillions of dollars were funneled into banks and corporations deemed too big to fail. The executives who caused the crisis faced no consequences. In fact, many received bonuses. Meanwhile, ordinary families lost homes, jobs, and savings. The trick was simple. Privatize the profits, socialize the losses. And it worked, because the public was told it was necessary to prevent total collapse. So where does your tax money actually go? Most of it flows into entitlements that were never properly funded, defense spending that enriches contractors more than it protects citizens, and interest payments on a debt that will never be repaid. A tiny fraction goes to the things you see and use every day: roads, schools, and public services. And a hidden portion disappears into subsidies, bailouts, and off-budget expenses that benefit the wealthy and powerful. The system isn't broken. It is working exactly as designed. Taxes are sold as a social contract. You pay in, and society benefits. But in reality, taxes are a mechanism for transferring wealth upward while keeping the majority dependent and distracted. The Roman emperors understood this. They provided bread and circuses to keep the masses content while wealth concentrated at the top. Modern governments do the same, just with better marketing. History teaches us that every generation believes the system works for them until they look closely at the numbers. Your grandparents trusted pensions that were never funded. Your parents believed housing would always appreciate. You are told taxes fund a functioning society. All of it is misdirection. And until you understand where the money actually goes, you will keep paying into a system designed to serve everyone but you. If this gave you a new perspective, hit subscribe. History has the answers, and here we show you where to look.